Welcome back. In today's topic, we are going to discuss about the commercial banks. First, we'll see what is a bank. A bank is an institution which deals in money. Okay, it is simple. We all know that. So, what does a bank does? It accepts the deposits from the public and lends the same to those who are in a need of it. Okay, whoever need money, it lends to them. So, it is a dealer in money and the credit. Okay, in fact, modern banks are performing the various functions, and the few things what is the bank is doing means it deals in money first, and it accepts the deposits and advance the loans, and it deals with the credit, and it has the ability to create the credit, and it is a commercial institutions because we are going to discuss about the commercial bank. Commercial means business, all we know that. So the commercial institution, what will be the main aim means earning the profit. It is a unique financial institutions that creates the demand deposit. So whenever the people are in need, it serves as a medium of exchange, and the result of it, the banks manage the payment system of the country. Okay, now we'll see what is commercial bank. Commercial bank means it performs all kinds of banking businesses and generally finance the trade and commerce are called commercial banks. Okay, so it performs the various functions. Now we'll see that one by one. Actually, the commercial banks are playing very useful role in the development of trade, in the commerce, in the industry. See, so many people do the trade, commerce and industry. They need the money. Okay, from where do we get the money for such activities? Means from the commercial bank. They become indispensable to the economic development of the country. They create the credit, mobilize the savings and provide the funds to the businesses. Okay, now we have different categories like scheduled commercial banks, non-scheduled commercial banks. You people would have seen public sector banks, private sector banks. Public sector banks, for example, SBI, SBM, okay, and private sector banks like HDFC, Axis Bank. So we have a categories of public sector and the private sector banks. Now we'll see the functions of commercial banks. So the modern commercial banks are performing the various types of functions. In that, the main functions are primary functions and the secondary functions. Okay, so under the primary functions, it does the two things. One is it accepts the deposit, and number two, it advances the loans. Okay, in commercial banks, what are the different types of deposits the banks are accepting means, number one, current account deposit, saving account deposit, fixed deposit, recurring deposits. Okay, so what are this current account deposit, fixed deposit, okay, saving deposit? We all discuss one by one. Okay, so current account deposit means these deposits are payable on demand. Whenever the people demand, see, we wanted money, we go and withdraw the money from the bank anytime. Okay, and any time, any number of time we go and withdraw from the ATMs. So how we are withdrawing? Because it is a current account deposits. Okay, money from these accounts can be withdrawn any number of times as we wanted by the depositors. Normally no interest is paid. Okay, interest will not be paid for such deposits. These accounts are generally maintained by the traders, business people, and current deposits are also called as a demand deposit. Is it clear? Number two, saving account deposit. So saving account deposits means people with a low income, salary earners. Okay, and generally these people open this kind of a saving account deposits. So certain restrictions are imposed on these accounts regarding the number of withdrawals. So how many times we are withdrawing this? Okay, there we have a restriction, like current account deposit we cannot withdraw any number of times. Here we have some restrictions under the saving account deposits. Okay, money deposited in the account can be withdrawn either once or twice a week. That is the restrictions we have in the saving account deposits. Rate of interest paid on these deposits will be low. Okay, so sometimes the fixed deposits the interest rate will be more, but in the saving account deposit the interest rate will be lower only. And this type of account encourages and mobilizes the small savings in the country. So we call it as a saving account deposit. Fine. Next one is fixed deposit. So what is fixed deposit means? Money in this account. So money in this fixed deposit, it is fixed for period of time. Okay, certain period of time the money is fixed. It cannot be withdrawn before the maturity of that period. For example, for 5 years if I deposit the money, I cannot withdraw that money before 5 years. Until that maturity period I have to wait. So the rate of interest for this will be very high compared to the saving bank deposit. And here the longer the period, the higher is the rate of interest. Fixed deposits are also called as a time deposit. It is also called as a time deposit. Fixed deposit, it is also called as a time deposit. The next one is recurring deposit. So recurring deposit means here money in these accounts is deposited in a monthly installment for a period of 1 year or more. Okay, so how many number of times we are depositing, that is this recurring deposit, usually the salary earners. Okay, for example, I am getting a salary, I can open a recurring RD account we say. Okay, that is recurring deposit. So this RD account can be opened and monthly installment, like we have to deposit the money in the bank for 1 year or 6 months or more than 1 year. After the completion of the last installment, the total amount what is gathered in the account is paid to the depositor along with the interest. That is called as a recurring deposit. Okay, so next we'll see advancing of loans. Okay, in the primary function it does the two things. One is accepting the deposit, the another one is advance the loans. Okay, and here the bank gives the loans. Okay, another important function of the commercial bank is to advance the loans to the public after keeping a certain portion. So now for example 5 lakhs I deposited means in that 5 lakhs the bank will keep a certain portion of my deposit as a cash reserve, as a cash reserve, like 10%, 20%, like that. Out of 5 lakh it will keep as a cash reserve. What is the remaining money is there, it will lend to the people who are in need, the remaining portion of the deposit to the needy borrowers. Okay, those who wanted to borrow the money, it will lend the loans to them. Okay, so there are various types of loans. Okay, so what are the various types of loans means? Number 1, it is called as a overdraft. Number 2, cash credit. Number 3, loans. Number 4, discounting bills of exchange. Okay, now we'll see what is overdraft. It is a facility provided by a bank to its current account holder. Okay, the bank allows such customers to overdraw their accounts up to a certain limit. Okay, now if I have a current account, in the previous thing we studied about the current account, fixed account, saving bank account, RD account. In that current account holder, okay, that holder is allowed to overdraw their accounts up to a certain limit. Interest is charged on the amount actually overdrawn by the customer. So this facility is generally available to the business firms and the companies. That is called as a overdraft. Number 2, cash credit. So it is another type of loan which is given to the borrower against the current assets. So what is the assets they have? okay, like wealth such as shares, stocks and bonds. So against these assets, they will the bank opens the account in the name of the borrower and allows him to withdraw the money from time to time up to a certain limit, okay. And value of his current assets, interest is charged only on the amount actually withdrawn from the account. So what is the assets they have? That is like I told you, stocks, bonds, shares. Against these assets, they will give the loan, means they can withdraw the money, and for this the interest rate will be charged, okay. That is called as a cash credit. Number 3, loans. Loan is a financial arrangement in which credit is provided by a commercial bank through opening a separate account is called as a loan, okay. So the loans are being given. So many people we have taken loan, so we will be knowing what is loan. In this method, the bank gives a specified sum of money to a person, for example 10 lakhs or a 5 lakhs or a 50 lakhs. Like that, the bank gives the loan according to the trade, business or a personal, many types of loans are there, okay, like a personal loans, okay, car loans, vehicles loans, okay, gadgets loan, many types of loans are there. So the loan amount is credited to the account and for the borrower, and the borrower can withdraw the money from the account according to his requirement, but the interest rate is charged for the entire amount. For example, 50 lakhs I have taking a loan, means for the entire 50 lakhs only they will charge the interest, but the interest is charged on the entire amount sanctioned by the bank, that is the loan, okay. So the next one is discounting of bills of exchange. So this is another type of lending by the modern banks. So what is this discounting the bills of exchange means? Encashing the bills of exchange from the banks before the date of maturity, okay, before the maturity date. Suppose I want to exchange my let me tell you like this. The bank deducts a certain amount of the discount from the face value of the bill and pays the balance to the person discounting the bills. The discount deducted by the bank is actually the amount of interest charged by the bank for lending the money. See, I'll give you one example here. This discounting the bills means, suppose I give you one bill, okay, I have to pay you certain amount, okay. That amount I have to pay, that is 20th of this month. 20th is the maturity. Then only you have to discount, you have to exchange this bill to the bank, but you wanted the money amount immediately, so 15th only you are going and withdrawing the money from the bank. So the bank will discount from the bill amount, it will accept that bill, it will discount, means it will deduct some charges for that, the remaining, the face value, it will give to the person, okay. The bank will do that work, that is discounting the bills of exchange, okay. So that is the another function done by the commercial bank. Now the primary function is over. The primary function are accepting the deposit, advancing the loans, and the bank performs, the commercial banks performs other functions also, that is a secondary function. In the secondary function, it has two different types. One is agency services, the other one is general utility services. So first we will see agency services. Under the agency services, the bank performs like remittance of funds, buying and selling securities, making of payment. See, remittance of funds means banks helps their customer in transferring funds from one place to another place through the drafts or check. It is called as remittance of funds. So the bank performs this function, okay. Number 2, buying and selling of securities. So buying and selling of securities, various securities like shares, stocks, bonds and debentures. All this the banks buys and sells on behalf of their customer. Okay, the bank buy and sell on behalf of their customer. It is called as buying and selling of securities. Okay, the next one is making of payments. We all know that commercial banks help their customers by making the payments of their electricity bills, insurance premium, tax and the salaries we will be getting on behalf of the customer. The bank does that, so it makes the payment. Okay, so that is called as the agency services. The next one is general utility services. See, general utility services means the bank does various functions like locker facility, issue of travelers checks, ATMs and credit card facility. So locker facility means we know we can keep our gold, silver, ornaments, some valuable things, okay, important documents in this locker. Okay, so bank gives such facility to the customers, and some annual rent will be charged by the banks for this services. So the bank provides the locker facility. Okay, and the next is the bank gives travelers check. So why do they give the travelers checks means, see, to carry money safely while traveling within a country or abroad. So at that time, if money means somebody can rob, we can lose the money somewhere. So for the safety of the money, the bank gives the travelers check. Okay, thus the customers can travel without fear of theft or a loss of money. That is, travelers checks are issued by the commercial banks. Next is ATM card and credit card facility. So we know what is the function does. So the banks today have an automated teller machine. So ATM means automated teller machine. So means under this facility, customers can withdraw their money from ATM centers, counters easily and quickly in 24 hours. Any number of time. Everybody use ATM cards, you people know very well. Okay, so bank have introduced the credit cards also. So credit card means it is an instrument which can be used to purchase goods and services without paying immediate cash. That is credit card facilities. Okay, so these are the various functions done by the commercial banks. So tomorrow we'll be continuing with the commercial banks. It performs another important function, that is credit creation. We will be discussing tomorrow. Thank you for watching.